Given that we want to describe how banking services could be disrupted in the future, it will be best to start by distinguishing between the two main types of banking, commercial and investment banking. Commercial banks are the regular banks we see around us, providing loans to the population and storing its savings. These are the so-called traditional banks, who are mainly involved with deposit-taking and credit-giving activities. These banks collect deposits from people and companies who have savings and then lend the money to borrowers. The difference between the interest they pay to depositors and the interest they charge borrowers is called spread and represents commercial banks' main source of revenue. In addition, throughout the years, commercial banks started offering some other services such as international money transfers, custody, letters of credit, forex dealing, and escrow accounts. Investment banks, on the other hand, deal with more sophisticated operations. They assist businesses in major corporate events, like when they are about to make an initial public offering and list their shares on a stock exchange, or when they are involved in mergers and acquisitions processes. I'm sure you'll agree that these two business models are quite different, and it makes sense to analyze them separately. So, which one are we referring to when suggesting why banks won't ignore cryptocurrencies? Commercial or investment banks? Actually, both. But let's focus on commercial banks first, since they impact the everyday life of most people. The commercial banking business model would need to be updated in a major way in the advent of cryptocurrencies and blockchain technology. In his 2015 letter to shareholders, Jamie Dimon, the CEO and chairman of J.P. Morgan Chase, one of the largest banks in the world, said, "There are hundreds of startups with lots of brains and money who are hard at work on alternatives to traditional banking. Silicon Valley is coming." After the boom of 2017 and the huge amounts of capital, research, and development pouring into cryptocurrencies and blockchain technology, it wouldn't be an exaggeration to say that Silicon Valley and the tech startups are not just coming, they are advancing at full speed to the impact, and banking is the first sector to feel the force. But why should banks even bother? Their business model has been valid for hundreds of years, and the Internet hasn't created any significant disruptions so far. Well, this time we are talking about the Internet of money, and things are different. Traditional banks' core business revolves around deposit-taking and credit-giving. If people stop depositing their funds and bank deposits decrease, commercial banks would not be able to finance the loans they give to borrowers at a cheap rate, and hence, traditional banks' entire business model would become outdated and obsolete. It would be like them trying to sell videotapes and old-school film cameras in the world of online video streaming, digital cameras, and smartphones. Or like using homing pigeons in the age of instant messaging. Yes, people used to do that, and it was the standard. But guess what? The world is changing fast. We can keep listing examples that validate the point of technological disruption all day. But let's move on with the main story. In the presence of countless young, ambitious, and dynamic fintech startups, we would just like to remind our dear friends in banking of the old saying, "Don't bring a knife to a gunfight." Right. So why would we expect less people to deposit their money in traditional banks in the future? Until now, there have been very few places where people could store their money. Options were to keep it at home and have jars filled with banknotes, bury piles of cash in the garden, or simply deposit funds in the bank where money would be safer than at home, provided the bank doesn't go bust, of course. Another advantage is that bank transfers make it easy to send money to other people or companies. But how about the billions of people around the world who have been ignored forever by traditional banks and basically cut out of the financial system? If old-school banks don't want to serve them, somebody else will do. Fintech is coming, and blockchain is leading the way. The advent of Bitcoin and cryptocurrencies in general gave people a viable alternative. You already know that blockchain enables secure payments and store of value without third-party interference. Whatever digital money you have on the blockchain, it will be there, and nobody can take it away, provided you store your private keys properly. Therefore, banks aren't the only option for storing your funds anymore. The clearest evidence that people consider cryptocurrencies as a viable alternative comes from countries suffering hyperinflation, like the recent examples with Zimbabwe and Venezuela. The price of Bitcoin skyrocketed there and held a substantial premium over the rest of the world. This was due to the exceptionally high demand for Bitcoin in these countries. In addition, transitions carried out on the blockchain tend to be much faster and cheaper compared to traditional bank transfers, especially international ones. In the future, new solutions will emerge and current solutions will be improved significantly. So any kind of money transfers will likely be way more efficient, cheaper, and faster than existing payment systems. All of this will benefit consumers and likely disrupt traditional banks as they start losing business in a scenario where decentralized digital money becomes the prevalent form of payments and store of value. Of course, traditional banks can choose how to address the upcoming technological evolution. We believe that the smart response would be to try and adapt to the changing paradigm and embrace the new technology with all the benefits it brings. You can't stop progress, and it would be foolish to ignore it or try to resist it. Whoever chooses to be rigid or otherwise fails to adapt to the new environment risks to exemplify yet another confirmation of the principle of evolution and follow the fate of the dinosaurs, or of Blockbuster, the former movie retail giant of 15 years ago, which was displaced by services like Netflix. In the next part, we'll examine how blockchain solutions can impact some of the existing services offered by traditional banks. Stay tuned, and thanks for watching.